lovely to be speaking with you. I wonder if you could just tell us a little bit about yourself and what you do and your relevant experience before we elaborate on affordable credit in a bit more detail.
Thanks, Josh. Well, good morning or good afternoon or good evening to whoever is going to be watching this. So I'm Christine Allison, and I have had an interesting career in so much as I've worked in international finance development, a lot of microfinance in the emerging markets and developing world, from a seat at the World Bank for 20 odd years. But 10 years ago, I gave up that life and moved back to the UK, and have been working on access to finance for both individuals and micro SMEs since then. And until this past year, when I have found myself happily based at my home in Devon, I had a platform in London, so I was working on national stuff and a bit of international still, as well as having quite a significant foot now in the Southwest. And among other things in the Southwest, I, as of April the 1st, will become chair of the Southwest Investment Group, which is a CSFI doing doing loans to the SME sector here in the Southwest.
Excellent, thank you very much. So you know that at EPA, at Project Inclusion, we're undertaking a study into the current state of the market for affordable credit, never more pressing, as it were, than now, given economic struggles and constraints for lots of different people as a result of the pandemic. What's your angle? What are your initial thoughts about the availability of affordable credit in the market more generally around credit?
Well, I think we're in a better place now than we were 10 years ago. So I started getting really involved with this in 2012 when I worked on a task force that the Archbishop of Canterbury put together. Sort of was a response to trying to compete Wonga from the market. And I think in those 8-9 years since 2012, there's been slow progress in terms of different providers coming to the market, different products coming to the market, and a lot of that, thanks to the fintech sector. But that said, the Woolard report came out last week and says there are probably around about 11 million people still who don't have easy access to fair price credit. So certainly from the consumer finance point of view, it is still very tricky. And we know a lot of people who do have access to products are paying a quite significant poverty premium. So that they're paying a lot more than you and I probably would. So, for me, I think it's a glass half full rather than a glass half empty. But as we sort of get into this new decade, still a lot more to do.
Could you elaborate a little bit on what you think should be done? By way of product development, but also in respect of the regulation to which the market has to comply.
Well, let's just start with regulation because Woolard came out last week, and so we've all been having another think about regulation. And I think, to my mind, the regulator is still a little bit ambivalent about where it sits on the side of good and the side of bad. And sadly, one sees that too often them just jumping after something like Klarna and the buy now pay later sort of market, which of course has got some issues, and there are some people who are being financially distressed as a result of it, but nonetheless products like that are still doing good. I think one perhaps should not blame the regulator for there not being the sway of products and scale that the market needs. The messaging from the FCA is certainly one of wanting an open, competitive market, and I think a lot of what they are doing and certainly saying is definitely pro a competitive market. After what happened with Wonga really did a lot. It did a lot of good because it really stopped a lot of egregious behaviour that was going on, but it's also meant that a lot of companies have exited this market because they are just so concerned for their reputation and for, if not the FCA, then FOS coming after them, and the penalties are pretty steep.
what would you say are the priority things that fintech can do, and what do you think the one or two priority things should be that the regulators do?
Yeah, the great thing that fintech can do is it can innovate very quickly and bring new and different products to the market, and products that make sense for, if not that entire 11 million people, a chunk of that 11 million people. So that is one thing, and we've seen a lot of fabulous innovation in the last few years. And the other advantage, of course, that fintechs have is from the cost base. That they don't have any of the legacy buildings and clunky systems like, say, the banks have. So if they get a product that really does bring somebody to the market, they for the most part can bring it at relatively low cost to the consumers, and they have the ability to do that at scale as well. So I think there is a lot of good that's happened in that space, but I can't put my hand on my heart and say that in February 2021 that is really yet having the impact on the consumers that we want it to have. Now, why is it not yet having that impact? Yes, I mean, I guess the regulation is putting some drag on the creativity, and as I said a few minutes ago about sort of the reputation of, you can do 999 things well, but if you get one thing slightly wrong, then you are absolutely damned. You're going to be in the front of the Daily Mail or some such newspaper, and that's it. Brand reputation gone.
Are you confident in the future in terms of the market being properly addressed as we get into the decade? Would you be able to put your hand on your heart and say, yes, I think things will improve, and the people who need credit most and need it at an affordable rate will get it?
No, I don't think I can put my hand on my heart yet and say that is going to happen. I mean, it's not for want of trying. I mean, that is for sure. I mean, maybe we're all a bit clouded right now because of COVID having sort of knocked our attention to something other than what we were really attending to, and there's been some sort of sad lessons of how not to do things around the response to COVID. Sort of maybe sort of it knocks one's sort of trust in government and regulators and things to do the right thing. I think it's a mountain we have to keep just trying to climb, and one day we'll get, if not to the summit, near the summit.
Christine Allison, that's been fantastic. Thank you for sharing your views, very pointed, and possibly contrasting from the responses that other people have given us and will give us, I guess, which is always good. So thank you very much indeed.
Sorry, Josh, can I just say one other thing?
Yes.
I did mean to say that.
Yeah, sure.
Perhaps my slight pessimism about prospects in this country is tempered by having worked internationally for so many years and having seen really good progress in other countries around the world. Like the whole M-Pesa thing that started in Kenya, and the way India's gone about sort of really interesting technology and ways of reaching some of the poorest people. So I do think there are solutions and ways in which sort of good things can happen at scale. I think I just sort of find in this country perhaps sort of the clunkiness of institutions and the slightly guilty until proven innocent, often a sort of attitude in this space, somewhat contrasting to what I've seen elsewhere in the world.
I think that's a fantastic message, actually, that the solution doesn't always exist within the UK, despite our advancement in financial services. Often it can be found elsewhere, and we need to be humble in accepting that.